Hello traders, and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking a little bit about the GJ sells that were executed and taken about 2 weeks ago, I believe. I obviously documented every single step in the trade. I've prepared some screenshots that we're going to be looking at. Everything was shared with the private community. People in the mentorship already know that. So essentially, yeah, we're going to be covering a little bit of that. Hopefully that will give you some value and information. And there is a great example of inducement, so we're going to be talking a little bit about that as well, right? With all that being said, guys, and by the way, this POI over here where GJ touched and dropped about, let me see over here. I think it dropped about 300 pips at this point, 360 pips. That was shared with the public Telegram channel. So if you join the channel and go back in time, you will probably see that screenshot, right? I believe it was sent out as it was sitting over here because obviously this is an interesting area to monitor. It's the opposite end of the range. So there was a probability that we were going to be getting some reactions to the downside, possibly a new lower low, which once again, we don't know as of now because obviously structure is bullish, right? But yeah, that's pretty much what we're going to be doing in this video. We're going to be covering this trade from start to finish. Everything was shared with the community as it was developing. Once again, it's not a signal service, what I have in my private community, but I do share setups and ideas and how it's developing and market updates. So we're going to be covering all of that. Now, with all that being said, guys, if this is something that you want to learn today, make sure you stick through the entire video because once again, we're going to be sharing valuable information over here, guys. So without further ado, guys, let's actually get started. So traders, with all that presentation out of the way, we're going to be getting started right away. As you can see, I've pulled up a screenshot of what was shared with the private community. Let me quickly open this up over here. So you can see that's me. This was shared the 12th of January 2022. I'm monitoring GJ closely and we will take a further look in a second, but just for now understand that. And this was sort of my bias at the time, right? I think we will drop now or we will clear all the liquidity highs into the refinement to then potentially drop, probably setting a sell limit at the refinement, but we shall see what happens. Also approaching high volume time, right? So that was shared with the community as price was trying to trade into our point of interest, which is essentially this rectangle that you see over here, which is an origin of an impulse, which is essentially what I always teach, right? If you recall to what's been sort of spoken about in this channel, that should make sense to you, right? So yeah, that's pretty much the first thing that I wanted to share. We can now comfortably move on to the next picture over here. So just give me a second. We're going to be zooming out. This is just the same picture but with a better perspective. As you can see, this is sort of my bias. This was the block that I was trying to monitor. We're going to be getting into more detail in just a second. But for now, understand that that was the block. This was the timer for the live market environment. And this is essentially what we're going to be working with. Now, let's start talking a little bit about why this POI is important. Because it truly was, okay? So as price tapped into the higher time frame block, which is essentially, if you zoom out and look at the higher time frame, that would be the opposite end of the range, which once again was shared with the Telegram channel. So as price initially tapped that, we broke internal structure to the downside right over here. So that's the first clue, right? Now you have a shift in profile. You went from a bullish structure to a bearish market, and now you're trying to understand a little bit of what's happening, right? You look at the candles, you look at your timing, you look at where you need to be, and you try to execute based on that, right? So we follow structure, guys. Then you get this weak retracement, which essentially trades back into this block over here and continues dropping further, right? Now you're even more sure that, hey, structure might be shifting bearish. We might have to wait for a retracement at this point to then look for potential sells, right? So that should have been the bias. continued sells, right? I think it really makes sense. You have strong bearish delivery, weak bullish price action, strong bearish delivery, weaker bullish price action, right? So that's the information of this picture. Let's actually continue. And this is at the point where my sell limits got triggered, because once again, if you remember the first screenshot, we were talking about setting sell limits at the refinement, which is essentially what happened, right? Price continued pushing up, and eventually my sell limits got triggered, and my stop loss was kept above structure, which is essentially this high over here, right? Let me actually take a second to show that to you guys. This was the high where my stop loss was set, and we're going to be moving on now, right? So let's see over here what we have. Let me quickly get rid of that. We don't need that, and we can move on, right? So essentially, guys, if we go back over here, let's talk a little bit about the inducement part of the trade, which is important, right? Because some of you guys may have actually been interested in selling over here, which is once again not wrong, right? You can see it worked initially, but as price came in for the second time, you once again need to understand what POIs you're trading, right? And this is what I've been telling you guys for the longest time now in my YouTube channel. You need to avoid Asian highs and Asian low POI, okay? Even though it may look good, you don't want to be trading those because those are liquidity pools, and unless they are protected for the day, you are going to be suffering, right? So avoid Asian highs, Asian lows, POIs, okay? Which essentially, if you look over here in this picture in particular, what do we have? Well, we have an Asian high over here that's unliquidated right over here. And you have another one right over here, which I've actually labeled to the right. So why did I not try and trade these 2 points of interest? Well, it's Asia high liquidity. I know that the algorithm is likely to target that, so I'm going to be avoiding that. And once again, this is creating inducement, because you can't imagine the amount of smart money traders that were looking to sell this point over here, right? And you look at it and you get some reactions, right? So that gets even more people funneled into sells, right? You look at this, price hits the block, now you have a weak bullish candle, strong bearish candle, weak bearish candle once again, right? So once you come to this point where you have this shift, right, 2 consecutive bearish candles coming down, there's plenty of people that are trying to sell this market. Reason for it is because it's not difficult to understand that this is a potential POI and this could be a potential turning point. But what's difficult to understand is that this is actually Asian high liquidity. We have another one just above. So think about it. If you're going to be the market maker for this market, are you really going to leave 2 sets of unliquidated Asia highs right over here untested, and you're essentially going to be leaving that and dropping without taking that liquidity? Obviously not. Obviously not, right? You're going to be clearing all that out. You're going to be trying to induce people into selling early, and once that is done, right, and this is where you actually look at the timing of the market, which is another aspect of what I teach in the mentorship, then you can look for that real shift, whatever it may be that you use, to then look for sell. So that's essentially what happened, right? We induced people over here with the 2 sets of Asian highs, one even above here, and essentially took them all out into the refinement, which is the turning point over here, right? You have this untested IFC structure. So obviously, if you're getting 2 sets of Asian high taken into that at a very specific time during the day, then well, you can assume that that's going to probably provide you some a nice trade to the downside, right? Especially if you're looking at the bigger picture and you're trying to understand what's happening overall, right? So I hope that the idea behind inducement in this trade makes sense. Should be pretty straightforward. Let me quickly summarize that. We have liquidity highs over here. We have people trying to sell the market right over here as we're hitting this point of interest, even more as we're getting reactions to the downside, right? So essentially, you want to be paying attention to the POIs that you're choosing, right? If you have a POI that's sitting right above liquidity, then just wait for that, right? Have that patience, give yourself that comfort, wait for the liquidity to be grabbed and trade that way, right? Because if you're doing that, then you're getting involved when people are getting liquidated and manipulated, which is essentially what you're trying to aim, right? So guys, that should be pretty straightforward. Once again, let's remove the drawings and let's continue talking about stuff, right? So this was also sent out to the community, right? As price, this is essentially the same block, just zoomed into a lower time frame, right? Because that's what I teach. As price is hitting your block, you have to zoom into lower time frames. You have to monitor order flow delivery. Every single mitigation is unique. So we apply some principles, but we're free to frame the trade ideas however they make sense at that point, right? I do teach a protocol as well, which you can just follow. But for those who are trying to sort of be more precise and getting involved into more trades, you can adapt, right? And just apply the concepts. So what I said over here, once again, pretty straightforward. GJ could be at a potential re-entry and some information that we're not going to be talking about, but essentially that, right? As price was over there, if we look at the next screenshot, we will have a little bit of a better look into that. So let me do that. This is where the potential re-entry was sent out, because remember guys, I took a sell limit somewhere within these two bullish candles. Obviously my stop loss above structure, above the PY validation point, which if you remember my last video, that's what I talk about, right? You want to keep your stop loss above invalidation points and mitigation highs and lows, right? So this was the potential re-entry that was sent out to the community. Once again, not a signal, a idea. Okay, I'm telling you, hey, there is a probability at this point in time, due to the reasons that we've just covered essentially, that we're not going to be getting above this high anymore and that we're now probably going to be dropping, right? So that's what I sent to the community. That's what I thought would happen. And if you look at the result, right, and let me actually get rid of that. Do that. This is sort of what happened, right? We started eventually dropping. This is sort of my positions, as you can see, plus roughly 70 pips, holding full volume at this point, because once again, I was very comfortable with the execution. And I'm not trying to brag about entries, but this is what you can achieve if you're actually trading and using limit orders at specific POIs. And yeah, this is essentially what happened, right? We dropped. That was amazing. You can see this is sort of what I caught. Once again, I'm not trying to make this too complicated, but I didn't held the entire trade through the 350 pips that it has dropped at this point. I'm telling you the truth here. This is where I took most of my volume out, and we're going to be talking about why that happened, right? Reason for it, once again, guys, if you recall, if you've been a member of my channel for quite some time, this is your daily cycle frame, right? And what do you see? Well, once again, you have the Asian high liquidated into a midline test, into an expansion that's actually trading into a higher time frame block, to then go ahead and manipulate the opposite end of the range, right? This is what I've been saying for the longest. If you're going to be getting a bearish day, you want to see the Asian high taken first, right? Into then taking the Asian low. Once again, you don't want to be selling just as the Asian high gets taken. You have to have an idea on why that would make sense, right? But once again, do a manipulation module in that specific day of the algorithm, right? So that should be pretty straightforward as well. And yeah, I took the Asian low. I held it a bit more because, you know, volume was there, things were moving nice. And then I essentially closed most of my positions. You move to break even and you call it a day. You say to yourself that you've done a great job, and that's about it. You don't FOMO into more trades. You appreciate the win that you've taken and you call it a day. Crucial aspect to your trading, right? So guys, that's essentially everything that I wanted to share with you guys in this video. Once again, pretty straightforward. We went over the idea behind the trade, why that was taken, what were the ideas, why that POI was interesting, how inducement played a big role in that trade, and how everything essentially played out. And if we go back to the current time, let's go over here. You can see I pretty much closed. If we go to the 3 minutes, let's see over here. So this is essentially where the sell, the potential reentry for GJ was sent out. If we turn the liquidity indicator on, we have the same Asian pool. We took that out and we call it a day right over here, I believe, right? And eventually look at the next day, same idea, right? Asian high, Asian low, Asian high taken into the Asian low, bearish day, continuation. Here we have a day where the Asian high is protected. Once again, that's okay. And eventually price just kept dropping and dropping and dropping, which is no big deal because once again, I can re-enter, I can do things of that nature. So it's okay, right? I made my profits, I called it a day. I'm not going to be here sitting in front of you saying, hey, I'm still holding my position. I knew it would drop 400 pips, right? That's not what I'm trying to do. I'm trying to be honest about my trades. I'm trying to be honest about my executions, right? So guys, with all that being said, I really do hope this video provided you some value and information. I think it had some really good information to take away. And if you're going to be taking something away from this video, let it be that you have to wait for the inducement to happen to then look for your real POI that's going to provide you the shifts, right? That's pretty important. And once again, to understand that, you want to be monitoring your liquidity pools, not only in the form of Asian highs and lows, but also in the form of trendline liquidity, relative equal lows, session time liquidity, right? Those are key criteria that you need to pay attention to if you're trying to trade small money concepts. So guys, that's going to be it for this video. Thank you very much for listening. I really do hope this provided you some information, and I will see you guys very soon. Thank you for listening.